In trading the open, there's some setups that work really well where you can get entries that have almost no drawdown. So I was able to enter here, 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 and here. And I'm going to go over how I was able to find those entries and the structures that we use to consistently identify these pivots that have little to no drawdown, and then where to take profits. This is going to be using the same concepts that I've talked about in the last videos and we'll continue to build upon. In this, we're looking for failed second entries, and then we're looking for low volume nodes to identify areas that should hold as far as resistance goes. It's important to note that as the market opened up here, that we're in a longer term uptrend. The market pulled back a little bit. And then as this shoots up here, there's not really any sellers in the market. So we're taking advantage of where the not the trapped sellers are, but where people put sell positions on that then quickly need to liquidate. We open and close these trades inside of a couple seconds. So first we need to look at where the uptrends failed. We can use that, but we can do that by looking for these low volume nodes, the big accelerated pushes up. We can also use a fixed range volume profile indicator to see that right in here, there's a low volume node. There's one here as well where I've marked this chart or this pivot. This one is shown more easily on a 15-second, but it has 2 points of confirmation. And then there's also one over here. If we go ahead and look at this, there's a low volume node here as well. So these don't become in play as sell signals until we get a move below the low of the second entry below that. So inside of this uptrend, this should be support. You see an attempt to hold that there. It's the same thing for these ones here. So this should be support inside of this sell attempt. Once the market pushes up above that, and then comes down below it, this should be an invalidation area where hypothetically there would be a sell. Because the market context was a longer term uptrend, we can then wait for these to fail and then enter inside of those immediately. This works best in high liquidity markets, like right on the 8:30 open, and for about 20 minutes where these positions are, people are attempting to put those on and then finding out quickly whether they work or don't work. Just to show you where these invalidation levels would occur, after you have this push up here, a move below this, actually it's this one too, invalidates this, so then this becomes hypothetical resistance. Same thing with this, as we come down below this, this then becomes hypothetical resistance. So simply put, you're looking at a slightly longer time frame on the 3-minute chart and then looking to see where are there invalidations of buy activity. So you can see on the shorter term time frame, there's a big push up there, there's a big push marked up here, there's a push down here and then a push here, which now functions as a pivot. And then if we look at this one, it's a big push up here. And most of these, actually all of them, I think, except for this one, have second attempts to hold that. So that gives them a little bit more power. So I got rid of the circles just so we can see. Now imagine the market's opening here and we push up through this. This is hypothetically a sell area. There would be limit order sales there if this was going to hold. If we look at the chart over here, it's this push up, and I can get rid of it now, but it's this push up inside of this. I'll get rid of that as well. We're waiting for this to get invalidated, so we're looking at this level right here. When the market pushes up and tags this level, that implies that anybody who is going to try to sell this is out of position, and you can place a limit order entry there and get almost no drawdown. On the open, especially if you're trading larger positions, you should just take off at the next resistance. More often than not, sometimes it works to hold it. In this case, it would have. But there's a lot of times where you'll sit in a position and be like, oh, I should have taken $800, and then it'll retrace and it'll screw with your brain and your nervous system arousal and all those things. Usually it's better to play it safe there and just take the quick money on the open. So same thing here. We have an attempt to sell what was that pivot there. And so the profit taking level would have been, I actually just cleared it. But the profit taking level would have been here, so you would take off there. Then once we go back above that, this attempt to sell is now invalid and you can enter at the pivot that I've removed. I removed the box there. Same thing here, so you'd be entering here and just taking off there. It's 20 points, it doesn't seem like a lot, but on higher margin it is. Once we get to this one, once we've cleared this sell attempt, you see the push down there, there's people taking profits and the market keeps going up. That means that there's no more sellers here. The top is not in on the market. So it comes back up above this and then you can buy right there. If we're looking and using the fixed range volume profile indicator again, we can see that we have not cleared any red sell delta. So we're in a type 1 uptrend or a breakout, and this is the circumstance that we execute in here. We push up above this one as well, and then that's probably accumulated sell delta if we use the same indicator. It's not, it doesn't show up there, but you can see that there's a push down here, a subsequent low, and then because that was at this pivot over here, which is a sell area that should hold, and I'll talk about that more in a second, because that's a pivot there, you can enter there and then close at the next resistance. So how do we define those? We define them by talking about invalidated initiative buy pushes. You can see them on the chart. They look like big green spikes up like this. So that's the microstructure we're looking for. And then the context is that they've been invalidated because we've cleared a new structural low. So like once this comes down here, below this low, you can see that the market comes back up to that and then stalls. It should be a sell if the downtrend was going to continue. Especially on the open, when we just start blowing these levels out of the water, they're invalid and then there's an imbalance there. And so we can start trading that imbalance in the direction and just take profits at the next resistance. So we can look at those low volume nodes or fair value gaps or initiative pushes or whatever words you want to use. We can also look at trend reversal failure levels. So this one was especially powerful. Although we had actually cleared this level of the pivot right here, that was a buy, and we can take off where initiative sell put or initiative buy push. So in theory, there's also an imbalance there. Had you been buying that, you just take that off right there and take the profits. This one was a little bit different because although we went below that low there, you would think that that's a structural shift, and on a micro time frame it is. What it's retracing to is going to be which one is it? It's this one here. This area in here. So we have multiple areas, this push up and then an attempt to sell that. This is a major pivot. If you were trading pre-market, I had to pause the video there for a second. There was some noise going on. So if you're trading pre-market, this was a very important level because this was an attempt for this trend to reverse, and then we fake back above it and then it breaks down below. We don't quite touch it there, but if you're looking at how this structure is formed in this double top or pivot high or higher high, however you call that, it's the same thing. Initiative buy push, this structure here, and then it's a little bit higher, and right there is an entry. So the fundamental concept is that when you have a longer term uptrend like this, we're going up, and this is responsive buyers are buying here, probably just trap delta levels. You have clear as day. That's a different type of entry, but you know, support is there, clear as day. And the market's responding to that and blowing through these levels. You really just can wait until they clear them. And then once they clear them convincingly, you can place a trade on the other side. So they're like invisible support levels. That's how you can identify invisible support. So had you placed an order there where the invalidation was easy, almost no drawdown, same thing here. Once the market goes just slightly above that, but is clearly above that. So see how we have that push here, it's clearly above that, it sits there, you can buy there. People don't like to buy the highs. People don't like to close their positions when they're selling and they're losing, but then they get forced to as more people enter the market, and then that's what drives it up higher. So same thing here, you get a little push above this and you can just buy right there. Slightly bigger pullback, but buying the pivot for the same reason. The idea is that once the position gets invalidated by moving through it, you can enter there, and then when you have a type 1, this might even be type 0, it's just a straight up breakout, breaking through all of these, you can buy very aggressively at new highs. Notice there's a low volume node there. It's not exactly the same one. This would have been the one here. Right there. Once you get a push up above that, everyone thinks, oh, maybe we can sell this, and they take profits there, but the market's moving up aggressively, so a retest of here is a move for continuation, and you can sell at the next resistance point. If there's no resistance points, you can wait for a trend shift and then clear once that happens. So like had you bought here, for example, when you were holding for continuation, it would have made sense to take off right here, and you see people do that. So buying from here and selling there would have been 60 something points. Like I said earlier in the video, I like to just scalp these. It's better for my stress levels. But yeah, that's how you can identify these. This strategy is very consistent on the open. The 3-minute inversions of the LVNs are extremely powerful. So there are definitely areas to mark, and then trading on the open when the liquidity is coming in against the failed traders is actually where the money is, hypothetically, not investment advice. So anyways, hope this was helpful. If you got this far in the video, please like and subscribe. I'll keep pushing these out as much as I can, and I'm going to keep building up these frameworks and more real world examples of how these trades were executed in the live markets, and maybe one day I'll trade live on it too. But anyways, thanks for watching. Like, comment, subscribe, all that good YouTube stuff. Thanks again.